Is a chief financial analyst at Bankrate. He joins us now. Greg, thank you and good morning.
Good morning. Great to be with you.
So what are your thoughts on that latest inflation report? Now, and again, I should clarify here, this is not the Consumer Price Index, which is released by the Department of Labor. This is the Personal Consumption Expenditure, which is released by the Commerce Department. Now, please, your opinion.
Well, it validated a lot of what we had seen in the Consumer Price Index earlier this month. And yeah, less bad is the new good because the inflation numbers have just been so ugly for so long. This is really the first hint of improvement that we've seen. Of course, inflation is still very, very high. And for that reason, I think you're going to continue to see aggressive moves by the Federal Reserve, raising interest rates in an effort to slow the demand and bring down inflation.
It strikes me that we've dealt with a lot of volatility over the pandemic and even before that with some of this, rogue investing that we've seen out there. But things are so flat right now. You have a GDP that contracted and then they revised it and it barely contracted. Things are barely moving right now. And it seems like the entire economic world, or at least in the United States, is focused on everything Jerome Powell will say. And then things will change from there. So what is he going to say today and how will the markets react?
Well, the economy's in a bit of a transition. I mean, we had seen that rapid bounce back after the economy had initially shut down in early stages of the pandemic. And so like dropping a basketball off a 7-story building, the first bounce is the biggest. And then after that, it loses momentum pretty quick. So we're on like the 7th or 8th bounce now, right? There's just not a whole lot of movement. And with the Federal Reserve raising interest rates, inflation is public enemy number one. And I expect that Jerome Powell is going to reiterate that today. I think markets have maybe taken his comments to be maybe a little bit more on the easier side than he intends. And so I think he's going to have to be a little bit more forceful today in reiterating the fact that they are going to continue to raise interest rates and they'll need to do so. If they need to do so aggressively, that they won't hesitate to do so in an effort to bring inflation down.
Yeah, I feel like he's got to come out and say, look, guys, my role here is to get inflation down between 2 and 3%. And it's still way up there, at least according to the CPI, above 8%. What does that tell you? I got to raise rates. I know you guys want the economy to be great, but we're not there yet. Do you expect something along those lines, maybe in a little bit more diplomatic terms?
Yeah, definitely more on the diplomatic side, but I agree with you. I think it needs to be pretty clear cut. You know, what happened was at the press conference after the July Fed meeting, he said two things, but markets really grabbed onto one. You know, markets really grabbed onto this idea when he said that at some point it will be necessary for us to scale back the pace of our increases. But 2 sentences before that, he said that they may have to raise rates by as much as 0.75 percentage point again in September. Markets completely ignored that. They heard what they wanted to hear, and we've seen a nice rally in the markets since. And so I think that's made their job a little bit tougher, and I think that's why you'll hear a more forceful tone from Powell today. Forceful by his standards, not necessarily by yours or mine.
Yeah, inflation last month over 9%, just unheard of in the last 40 years. And yet it goes down to like 8.6%, and the markets are like, oh, thank God that's over. It's not over, though. And last year he was saying this is transitional or transitory. It's going to go away. It's not going to linger. He was wrong about that. Don't you expect him to sort of drop the hammer?
He was flat wrong about that. And, listen, 1 in a row is not a streak. Yes, we finally had seen maybe some better news on inflation, but a lot of that was driven by the fact we saw gasoline prices drop by $1 a gallon. And when we look below the surface at everything else, those are all still going up and going up at a pretty rapid clip. You look at shelter prices in particular, rents going up in many markets around the country by double-digit percentages. That isn't going to cure itself right away. That's going to continue to put pressure on those inflation indexes going forward. And that's why the Fed has to kind of keep the faith here, continue to push those rates higher in an effort to bring inflation down. This is not going to be a battle that's won soon. It's going to take some more work, and it's going to take some more time.
Yeah, inflation went down in both the CPI and the personal consumption expenditure, but core inflation was up 4.6%, and that does not include fuel and food prices, which are more volatile. So you exclude fuel, specifically gasoline prices went down, and inflation is still up pretty high. And that's something we expect Jay Powell to talk about later today. Greg McBride, thank you for your time.
Thanks for having me.
And we have some breaking news to report.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.